Warren Buffett's Berkshire Hathaway slashed almost 50% of its Apple holdings in the second quarter. Buffett's firm has been Apple's most prominent backer. Even after trimming shares to half, Berkshire's stake in Apple is sizable. Berkshire has dumped a total of 505 million shares since January 2024, making it a 55.8% reduction in their Apple holdings. What has spooked the ace investor? There can only be one or two reasons to buy the stock. You hope that the stock will go up and you can rake in some profits. But there could be a million reasons for selling them. So let's try and understand the possible reasons as to why Buffett did what he did. Number 1. US economy. The first and the most probable reason could be that Buffett is becoming wary of the broader US economy. A weak jobs report revealing a 4.3% unemployment rate sparked worries about US economic activity and whether the Federal Reserve waited too long to cut interest rates. The numbers indicate highest unemployment rate since October 2021. This is reflecting in Berkshire's cash pile, which stood at $277 billion, up from $189 billion almost 3 months ago, which is a sign of caution. Number 2. Defensive move. If you look at the entire Berkshire picture and the macroeconomic data, a safe conclusion is that Berkshire is getting defensive. This is what Kathy Seifert, an analyst at CFRA Research, told Reuters after the news broke out. It's no secret that Buffett's love for treasury bonds. What are treasury bills? Short-term securities issued by the US government. They are backed by the full faith and credit of the US government and are considered among the safest investments in the world. In 2022, Buffett's Berkshire Hathaway held a whopping $126 billion in US Treasury bills. Buffett reportedly prefers treasury bonds to other options because he never wants to worry about whether or not Berkshire's pile of cash is safely invested. Meanwhile, yields have jumped so much in the past 2 years that Berkshire is actually earning a pretty penny on this cash hoard. If that $126 billion is invested at a 5% yield, Berkshire is generating an incredible $6.3 billion in interest per year. But these returns too could decline once the rate cuts begins, which are expected in September. And thirdly, the Apple stock. Apple's warm growth rate and high valuation may suggest that Buffett has concluded the stock's prospects are not great. Don't get it wrong, Buffett still remains a big Apple fan, reflecting the iPhone maker's strong pricing power and committed customer base. He said at the meeting that he expected Apple to remain Berkshire's largest stock investment, but selling made sense because the 21% federal tax rate on the gains would probably grow. But his overall sentiment that he may have had towards Apple stock may have changed in the last 2 years. And finally, he is Warren Buffett. The only possible explanation is that he is Warren Buffett. He has taken the decisions, calls to buy and sell shares over the last 6 decades, stamping his authority as one of the best investors in the world. So his reasons to sell such a large chunk of Apple could possibly be something we cannot even think of.